options to sort of just give an intro to the investment options, because a lot of times we go into investment options and people don't even quite understand where do I begin? What are some of the reasons that influence what investment decision I should take? So I'll just take a few minutes to just take you through that. I think it's important to understand that whenever we're investing in assets, we're not just investing and to put money away, but we're investing based on our goals. And so all of us have goals. Some of them are basic goals like rent, food, electricity, safety, be able to rest, to have Wi-Fi. You know, there's things that we need that are really basic needs. And then the other thing that we need is to be able to meet our needs from a perspective of, you know, those things that I find make life worth living, the things that I enjoy to do, those things that give me a sense of prestige or give me the opportunity to continue to develop intimate relationships, to continue to grow my friendships. And so what happens is that if we don't invest, then you find that the things you were able to do before, you can't do. You have to change where you live, downgrade certain things, not be able to travel as you do. So then, you know, you have to invest. And then the other thing that when you invest or when you have assets, you want to make sure that you give yourself an opportunity to create real wealth that then helps you achieve your dreams, be able to do the things that you desire to do. So in summary, your assets need to do three things. The first thing your assets need to do for you is ensure that your basic needs are met. You know, even if you lost your job, at least for a certain number of months, you can meet your basic needs. And so you have to make sure before you go investing in very long-term products, in, you know, things like real estate that can give you good return. But if you don't have a safety net that you can rush into, then you have a problem. So you must make sure that your assets give you an opportunity to have your basic needs met. The second thing that you must make sure that you do is ensure that your assets enable you to be at the place where you can maintain your standard of living. If your children right now go to a certain school, or you live in a certain neighborhood, or you like to do your hair a certain way, get your nails done, go to the barbers, you spend Fridays somewhere or go on holiday, you want to be able to continue to sustain that lifestyle. And the only way you can do that is if you're investing in assets that are growing at least at a rate that is higher than inflation. And then finally, you want to take a little bit of more risk to give you the opportunity to make good returns. So here we're talking, you know, 3 times returns in 5 years or 20% per annum and above. So that then you're not just investing in things that are giving you 10, 12%. You want to be able to get a lot higher than that, because that's what then enables you to grow and become wealthy. So I just want to share a few ideas. And maybe if you'll allow me, I'll share my screen, because I've divided this into different assets. And it's easier sometimes when you can see the screen and be like, okay, I think I now get it. So the first one I said, you want to be able to have, let me see. You want to be, sorry, it's busy, but let's look at the first side, the security basket. Your security basket is where you put money. You're kind of parking money for safety. So, and by the way, you don't have to invest in all these things. I'm just sharing this slide so that you can get an idea of where do these investments fall. And then when I'm done with this, I'll share the kind of investments that are available in Kenya. So the security basket is your fixed deposit account, for example. So maybe you have an account with your bank and you tell them, fix my money or lock in my money for 3 months, because I know in 3 months I'll need it. That's sort of safety net, because maybe you need the money for education, for your kids' tuition or something else. A money market fund. This is putting money away in a fund that pools money with others and invests in very safe, liquid opportunities that when, if you need your money, then you're able to withdraw fairly quickly. So money for emergencies, money for, maybe you're saving for a wedding, maybe you're saving for a down payment for a car or something. This is where you put your money in a money market fund. Another one for safety net is treasury bills, you know. So you don't want to risk your money, you know, you have the money available, and you want it available, sorry, in about 3 months. Instead of putting it in a fixed deposit account, you can decide maybe the treasury bill rates are higher, I don't know, then maybe you can put it in a treasury bill as an option. A lot of people usually spend, you know, 20 years paying for a home and don't have other assets. it's important for people to recognize that the home is a basic need and therefore within your security basket. It's not an investment that you'll get a return on because it's your security, your residence where you live. Then you've got your pension. If you get an insurance policy for your children's education, that's also part of your safety net. Health insurance, very important. It's not an investment, but it's a risk management tool. So that would fall under there as well. And then maybe you decide, I want to invest in my own education. I need this certification. I want to go back to school and do an MBA. Or I want to, do another degree in order to make myself more, what can I say, marketable, or give me an opportunity to serve more kinds of clients and generate more revenue for my business. So that would be an investment in your own knowledge and expertise, and that would fall under your security basket. So in Kenya, let me deal with the security basket first, and then I'll go to the important basket. We have money market funds, we have treasury bills, as you do in Uganda. Pension, of course, education policies, fixed deposit accounts. We also have things like SACCOs, savings and credit societies. I'm sure you have them there, Sharon, as well, right? So the savings.
Yes, we do, but not at the level of Kenya. Kenyan SACCOs have taken it a notch higher.
Yeah, so Kenyans are big on SACCOs, and so people save in SACCOs, and you get good savings rates with SACCOs as well. What happens is people put money in the savings and credit societies because as you continue to save, you can borrow 3 times what you've saved, sometimes even with some SACCOs, 5 times your savings. And so people find it a great way to be able to save so that they can borrow against their savings to, grow more in their lives, to invest in businesses, to buy real estate and things like that. So those are opportunities where you can actually use for your security basket. So then the next level, so here we're looking at safety net, yeah? We're not looking at growing our returns very high. We're not looking to expand and double our money. Here, what we're looking for is safety and security, where I know that if I need my 10,000, I can go back to my account and I'll find my 10,000 right there. However, even as you invest in safe opportunities, you want to maximize the return within that safe space. So you want to negotiate with your bank for good rates. These days, we have banks offering money market funds as well. And so you want to negotiate really good rates so that you're not just taking whatever rate is offered to you. So then you've got your important basket. This one is where you want to maintain your current standard of living, as I mentioned earlier. So the question is, what sort of assets will be there? So again, the money market fund comes here because as you invest, you don't only want, so the thing about investing is the investments don't wait for you to be ready. What typically happens is an opportunity just comes and the deadline is in 2 weeks. And then, you're wondering, where do I get money from, right? So investing in a money market fund or such like investment gives you what we call liquidity, so ability to get cash quickly. And so you can, so if you need money to be able to deploy in an investment opportunity that has come, you're not having to sell an asset. It's money that's already growing in an account. And if you need that money, you just liquidate that account, ask to withdraw, you get your money fairly quickly within a day or two, and then you can deploy it where you want. So the money market fund option here under the important basket is really about having cash for opportunities available. Then you've got your listed stocks or shares. So companies, we have about 60 companies that are listed on the exchange. In Kenya, we've got banks, different industries. And so you would then invest in companies that are giving you good dividends, that are well run, that have a good board, that have a product or a service that is not easily disrupted. They're continuing to innovate. They're leaders in their market. So you kind of assess and see what companies are available for me within that realm. How are their revenues growing? Are sales increasing? Are they going down? What sort of things are the management planning to do, and what's their strategy going forward, given the current economic environment? And so you would need to take a bit of time to understand the companies. And what I advise my clients is to invest in companies that they like, that they already sort of interact with, because then it's easier for you to spend time getting information about it, and also talking to professionals like us and our research teams who are constantly trying to analyze and understand these companies to decide and to give opinions on whether or not the different companies that are listed are a good buy. And you do have great stocks even in Uganda. I, for one, am a shareholder of MTN, by the way, Sharon. And MTN pays great dividends, right?
We also have Airtel, Mom. The most recent one is Airtel. So you
Yes,
need to
and
come
Airtel. I
back
need to invest some more. By the way, I invested in several actually. I invested in Umeme. I invested in Stanbic, and my third one in Uganda was MTN. But I love MTN. Well, the price hasn't moved much, but the dividends have been quite attractive. Anyway, so then you've got treasury bonds in Kenya. So treasury bonds right now, on average, you're getting about a 15.5% return on it. Rates have come down. Earlier in the year, there was a bond that was issued. Was it earlier this year? Yeah, 18.4% per annum tax-free, which is very attractive. But rates in Kenya are now coming down. I don't know how it is in Uganda at the moment, but treasury bonds.
As by yesterday's auction, we're at 17%. So.
Oh wow. Okay.
So
and is that tax-free or?
Interesting.
Do you have tax-free bonds?
No, you Kenyans have tax-free bonds.
Our
bonds are taxed, actually.
Yeah. Yeah, we do have tax-free bonds as well in Kenya, which is great for foreigners because in regular bonds, foreigners pay a little bit more tax. But anyway, there's always opportunities there. So these would be in your important basket because what happens is that if you invest 100,000, you're investing at 17%. In that year, you're getting 17,000 interest from that bond. Then you've got commercial paper. So commercial paper is where these are issued by companies that are looking for money for short periods of time. So, for example, a company is looking for working capital, meaning, let's say, for example, they're in the food business and they get a contract to serve a certain institution. And maybe the number of meals they do a day is 800 meals a day, but this institution gives them an opportunity to provide 2,000 meals a day. And it's like, whoa, in terms of the number of tomatoes and onions and everything that we need to be able to meet those needs, that's just so huge in comparison to what our regular day-to-day business looks like. And they need capital. And so they can create an instrument called a commercial paper that enables them to borrow money from investors and pay back that money over, say, 6 months, 9 months, or 1 year. But the maximum period for a commercial paper is 1 year. So in Kenya, we have very many commercial papers. Different companies issue them at different times for different needs. But the minimum investment amount for commercial papers, most of them is R1 million, just because they're privately placed and targeted at what we would call professional investors. Then you've got corporate bonds. So just like the government borrowing money from the public, you have companies that borrow money from the public for long periods of time, so like 3 years to 5 years. And so they issue bonds similar to government bonds, except they're called corporate bonds because they're issued by companies and not the government. So of course, as you can imagine, this has a little bit more risk than treasury bonds. But these bonds are available. They're not available all the time because they're not issued always. And so what happens is if you do want to participate in a corporate bond that has been issued in the past, you can only invest in those that are listed on the stock exchange that are trading. And so then you can invest in those ones and buy from somebody who had already purchased. Then, of course, there's business. You could decide to start a business. You could decide to invest in real estate, in rentals, because those give you a return and cash flow as well. And then in Kenya, we have something called exchange traded funds, but we only have one. We only have one listed ETF, and an exchange traded fund is a fund that tracks the movement in price of another underlying asset. So just to put it simply, it's a fund that tracks the price of an underlying asset. So the one we have in Kenya is a gold ETF. And so this gold ETF tracks the price of gold. And so if you want to invest in gold, in Kenya, you can't invest in a gold bullion or a gold. You can't buy real gold on the stock exchange, but you can buy this exchange traded fund that tracks the movement of the price of gold. And so then you buy it like you would a stock. Minimum units is 100, and the price would be where the price of gold is. If it's 2,000 shillings, then you pay 2,000 shillings times the 100, and you buy your units of gold. And then we have one that I thought it would be nice to talk about, but I'll just highlight it, and then if you have questions, I'm happy to talk about it later. This is the Oak Special Fund. So we have special funds in Kenya. These fall under what we call collective investment schemes. So collective investment schemes are schemes that pool money together from different investors and invest in different funds. So you've got your money market fund. Some fund managers will have an equity fund, so a fund that invests in shares for you. So the fund managers and the portfolio managers would then make a decision on which shares do I buy. Do I buy MTN? Do I buy Safaricom? Do I buy Kengen? What banks should I buy, and so on. And so they have a portfolio of investments that they get into within equities or shares. And then you've got, so that's the equity fund. And then you've got a fixed income fund. So this is the third example of a collective investment scheme. So fixed income fund is one where the fund manager invests in different products that get a fixed income. So that's your treasury bonds, treasury bills, commercial paper, corporate bonds. Those fall under fixed income products. So in Kenya, you have different funds that offer fixed income funds. So instead of trying to decide which bond do I buy, and when do I buy the next one, and how do I time so that I get the highest rates and so on, you can decide, you know what, I don't want to get into all of that. Let me invest in bonds through a fixed income fund, through investing with a fund manager. And then there's also what we would call the special funds. So in Kenya, the special funds that exist, I think, are three that I'm aware of. And ours is the second one, Oak Special Fund. And so with the Oak Special Fund, what we've done is we've created this fund in such, and the reason, let me first go back, sorry, is that special funds work in such a way that they give the fund managers and investment managers a lot of flexibility to invest in different assets, both locally and abroad. So you can invest in Kenya, in Uganda, in Ghana, in Nigeria, in the US, in the UK, and in different assets. But of course, you have to have predefined strategies on what are you investing in and in what proportions, so that then you protect investor interests and also just make sure you're not making losses. So once you've indicated what your investment policy is, then the Capital Markets Authority gives you approval to go ahead and do so. So we got our license last year in 2023, and we began this fund early this year. And so far, as at today's, we are in November, as at October 30th, those who invested in the beginning have made about 24% return. And the idea for us is, and that's not, I'm not guaranteeing return, I'm just saying what we've done in the past. Our goal is to target 20% net of fees. Just investing in different assets at different times, making sure we're trying to maximize return for our investors. Okay, so then we've got the aspirational basket. And under the aspirational basket, you've got different assets here, but the idea here with the aspirational basket is, how can I make maximum return? So people will get into all sorts of things. Your own business, where you reinvest all your earnings back into your business, and it's a huge risk because of the amount you've invested in it. You invest in someone else's business, whether that's private equity or venture capital. You can decide, I want to do currency trading, or what we call forex trading. You can decide, I want to do crypto. Hats off to you. Or you want to invest in a hedge fund if you have the money to be able to do so. So these, as you can tell, are higher risk opportunities, but with the potential for higher return. And so you'll notice as you go across, you're starting from almost zero risk, and the risk is then increasing. And so hopefully the return also does the same. So all these different opportunities are available in Kenya. So let me stop sharing for a moment, because I know I've talked a lot, I said many things, but I'll pause so that then we can just process.
And the beauty is, in the talking a lot, there are a couple of questions you've answered.
Okay,
So
good.
which is really good. But for all the 60 participants that are so far on the call, they've been quite a number on and off. I'm sure they're like, how do we participate in the Kenyan investments? What do they need? Where do they start?
So generally, if you're investing in the regular things, you're investing with a fund manager or you're investing in stocks directly. And with a fund manager, I mean you're buying into a money market fund. You are investing in, a balanced fund, a fixed income fund, the Oak Special Fund, for instance. Those ones are fairly easy. What happens is you have to go through a process which we call the KYC. It's called Know Your Client, and financial people who are in the financial markets are required by law to know who their clients are. So there's typical things you will be asked to provide. So, for example, you will need to provide your ID or passport, a picture, your proof of address. What else would you be asked for? A bank statement. So, and then just indicate where is your money coming from? Is it from savings? Is it from selling a business? Is it from selling real estate? So there's typical questions that you'll be asked to fill out a form, but also provide attachments of these things. And in most cases, when you're not in Kenya, you'll be asked to have those documents notarized. So depending, but not all of them. Some of them you can actually just do it on virtually on an app. Now, depending on what you're investing in and the company that you're investing in, you might need to have a bank account in Kenya, but also a Kenya Revenue Authority PIN. And unfortunately, to invest directly in bonds in Kenya, you have to have a Kenya Revenue Authority personal identification number. And so what you would have to do is go on their website. I think it's on the iTax website. There's a section for foreigners who are non-resident, and there's a process then you'd have to go through to get that number. And so when you get that, so when you get that number, then you can go ahead and invest because you do need a KRA PIN.
Is it true that one needs to have a work permit to have a Kenyan bank account?
So the thing about the Kenyan bank account is that, yes, you need to have either a work permit or you're resident in the country. So you need to have an address.
Which way is easier? Let's talk about the easier way. If I use, let's say, for example, the Oak Fund, do I still need to have everything?
No. So you don't need any of that. With the Oak Fund, you can invest as a foreigner, right? We don't need to have. So we can wire money to Uganda, right? So you don't have to have a Kenyan bank account to invest in the fund.
Because I had a client who really wanted to buy bonds at the point when they were at 18%. And we went through the process. We were ready to make the investment. And the requirement was you need to have a work permit, to have a bank account so that your money is paid to that bank account. And this client is still waiting till today. So are you saying, Rina, if I push this client through to the Oak Fund or FIDA investment, they're able to invest through the fund, they get access to the bonds through investing in your funds?
So the Oak Fund, doesn't only invest in bonds, it invests in different assets. So I must mention that it's got different investments. So by investing in the Oak Fund, you're not only investing in bonds. So the quick answer to your question is yes, 100%. If you invest in the Oak Fund, you do not have to be resident in Kenya. You don't need a Kenyan bank account and you don't need a Kenyan PIN or a permit. Wherever you are, even if you're not in Uganda, you are abroad out of Africa, it is okay. Even if you're Mzungu, as we call them, you can invest in the Oak Fund. Now,
I have a feeling we have people that are not only in Uganda on this call. So in case you're not Ugandan and you're on the call, just send us a message from whichever country you're coming from. Back to you, Rina.
So that's right. So you don't have to be resident. Now, the other thing you could do, we have banks in Uganda that have branches or have presence in Kenya. So let's say, for example, Stanbic. And so what you could potentially do if you want to invest in bonds is have a conversation with Stanbic, Sharon, and see, can I get a custodian account with Stanbic in Uganda? Because Stanbic in Uganda, guess what, can buy bonds in Kenya. They have a relationship with the Kenyan, of course, Stanbic, and through Stanbic, you can buy bonds. And so you can actually instruct your bank through getting a custodian account to then buy bonds in Kenya. That's something that you can explore. So go ahead.
Something. What are the fees for a custodian? Because we're used to custodians being for fund managers. I can imagine Sharon, like me, with my small money, wanting to invest in Kenya. I walk to Equity Bank, there's KCB Bank, there's Stanbic Bank. All these have branches in Kenya. What would be the cost averagely, if you know, Rina? Can you share with us?
So for institutions, and Jacqueline, perhaps you can tell us what you guys pay. Is it 0.1%? And I'm sorry if you can't share, it's okay.
I doubt Jackie can answer that. Jackie is in financial literacy.
She's like, okay, no worries. But the point is, I think it shouldn't be. It should be somewhere between like 0.5% of the value of your assets per annum.
For an institution. I'm talking about.
Well, so and for individuals, I don't know. I know we have a custodian account, several custodian accounts, and that's the fee we pay. I think is 0.1%. And so that's what I'm saying. I think it might be 0.5% for an individual. It might even be 1%. I think maximum might be 1%, depending on the value of what you have with them. So it's an annual fee. It might be 1% per annum. That's what I suspect it is, 1% per annum for them to hold your assets for you. And when they hold your assets every year, or no, I think it's every quarter or every month, depending on how frequent you want, they'll send you reports. When you receive dividends, they send you a statement showing your dividends have been credited. They know where your assets are, whether, they'll keep records of what the fees and everything has been. And for them managing those assets for you, you pay them a fee of 1% per annum. So that's an option to use a custodian account. The other one is just to invest through funds. And that way then you can.
What's the minimum investment for the funds? If I'm taking the funds direction, which I find much more easier for a person that is not in Kenya to be able to have access to investments there. What's the average? What's the minimum investment for the funds?
So different fund managers have different minimums. So there's those who have, most of them would have about 1,000 shillings to 5,000 shillings as the minimum. I do know there's one that has 100 shillings as a minimum. I know one that has 5 shillings as a minimum. They're called chums. So it's electronic. I don't know what the process would be if you're investing out of Kenya for that small, that the one for 5 shillings. But the minimum investment amount will depend on the kind of fund. So that's for money market funds that I've just mentioned. For fixed income funds, the typical minimum will range between 5,000 to 10,000 shillings. For the special funds, there's one that minimum is 250,000 shillings. Our current minimum is 500,000 shillings for the Oak fund.
500, that's how much in dollars? Quick.
So that would be about 4,000, maybe let's call it $4,500.
Okay.
Yeah.
Okay. All right. So I think we are yet to get into the question bit where our esteemed people that have joined us today are going to ask questions. But Rina, as we get into the questions, I would like you to just give us a bit of advice and quick takeaways for everybody that is on this call, especially on how they can get started and how you can help them get started as FIDA investment.
Yeah, so I think perhaps is just not to be okay. So somebody says, I recently got the requirements for the Oak Special Fund. One of the prerequisites was to have a KRA PIN. Can I use the one for UG, the URA? So Joyce, I believe that you can. Maybe what you can do, you can send me a private message with your contact details, and we'll look into that for you. Because what happens is we have a template of the requirements, and so for Kenyans, yes, we will have to have a Kenya Revenue Authority number. So just send that to me, and I'll be able to look into that for you. So I think one of the things that I find, Sharon, happens is that people get overwhelmed and think, I can't do this. This is for this kind of people. You need to be wealthy to be able to invest. But with whatever you have, you can start with what is possible and just be consistent with it and keep putting money aside every so often and build your portfolio in that way. And a great place to start, I think, is actually stocks, especially if some of the minimums are too big, because stocks are very easy to invest in and you get dividends. And so if, that's of course, after you've got your, what am I calling them? Like your safety net sorted, at least for at least 3 months, you can get into the stock market and try and see which stocks give very good dividends, because some companies give even 10% dividend in a year. And so you could start there. And those who can, then you can also go into the funds as well. Yeah.
Yeah, thank you, Rina. So for those that are logged on, kindly send through your questions. We are doing the Q&A. There is a question from Dennis. Are you able to see it, Rina?
Yes, I've seen it. What is the exchange loss risk implication for OAK funds? So Dennis, thank you for the question. I think the exchange rate risk is there for anything that you invest in across borders, because for as long as you're investing in a currency that's different to yours, then there's that risk of when you're converting back to your currency, then, depending on whether the rate has gone up or down, then there's an impact on your investment, either positively or negatively. So the risk is always there. I think the beauty about the OAK fund is that the investments that we have are in mostly in US dollars, although we do have Kenya shilling investments within the fund, but also to say that we recently were licensed to offer a USD dollar denominated fund. So you could take the option of investing in the US dollar denominated fund and invest in dollars. That way, then you're investing in hard currency. And hopefully then when you're converting back to Uganda shillings, then you're actually earning a higher return if the shilling will have depreciated. So that's, but the risk is always there. And the risk of loss because of exchange rate is when you're either investing in, exchange rates have really moved, or when you're selling and, cashing it back. If the rate has moved against you, then you get less than you would have if the rates hadn't moved. Yeah.
We have a question from Riwa.
There's Rewa. Rewa is not a question. Rewa works with me. Rewa is my assistant, and she's.
Okay.
Yeah, so thank you, Rewa. Thank you. She says, for Ugandans, we use their version of our PIN. So it's TIN. Yeah,
tax
there we
identification number.
There we go. So that's what you would use, Joyce. You would use your TIN number. You're most welcome, Dennis. The next question is, in which of the 3 baskets would you place investments in land? Yeah, lots of land. Can Ugandan buy land in Kenya? So I would put land in the middle basket. And because you're not taking too much risk, land typically over time goes up in value. So that's where I would put it. Can a Ugandan buy land in Kenya? The answer is yes, but you would buy a leasehold land. So foreigners can buy land in Kenya. There's no issue. It would be leasehold land. I think the main thing I must mention with land is that you would have to make sure that you do very good due diligence. I would suggest that you use a lawyer. Please get legal assistance to make sure that the land that is being sold actually belongs to the person who is selling, that the plot of land is unencumbered, meaning there's no loan that has been taken using the piece of land, and therefore it is free and unencumbered is what we call it. That you also make sure that the piece of land that is being sold is legal in the sense that it has, even as it has been passed through different owners, that the land that has been done in the area that is being sold is a piece of land that is the correct size. So let me give you an example. There are some land dealers or land sellers who are going to an area that is an agricultural land where minimum lots of land is supposed to be 1 acre, for example. And then they'll go and subdivide, pay a bribe and subdivide the land to 50 by 50 plots and then sell those. And then you find later on that in that area you should not own land that's 50 by 50. It should be 1 acre size plots of land, and you end up being in trouble as a result. So that's what you would have to watch out for. So please do not ever buy land in any country without using a legal expert to do due diligence for you. It costs a little bit, but it's worth it. Otherwise, then it becomes very expensive for you. The next one, please share our contact for your oak partners in Rwanda. I'd love to pay a visit. So I'm guessing you are in Rwanda. We are not selling oak in Rwanda in the sense that it's not a product in Rwanda. You'd be investing in Kenya. And so we can organize a call for you. So maybe what I can do is type for me the contact details for the team global markets at fib.co.ke, and Shuti can get assistance there. We can always arrange a meeting.
Yeah, I have a question here.
Sure, go ahead, Sharon.
Monica says she would like to learn more about real estate investment trusts. Are they still there? The last I knew was the Stanlib one.
Was which one?
Stanlib. Yeah, Stanlib had a real estate investment trust fund. Is there anything in this space?
We do have real estate investment trusts in Kenya, and we have 3 of them actually, but one of them is listed on the stock exchange and available for people to invest in. The other 2 are for professional investors. The minimum you need for those, one of them is 20 million shillings. The other one is, I'm trying to remember now, I think it's 5 million shillings. So let me just tell you what they are first. Real estate investment trusts are a kind of collective investment, but they're a little bit different in this way. So real estate investment trusts are formed by companies that own real estate that are looking to fund their growth. So if, let's say, I owned different buildings in different locations, and I'm looking to grow and expand and buy more buildings and continue to generate, whether that's rental income or return from developing, and I don't have the capital, or I want to be able to be more efficient in the way that I'm doing my business, I can go ahead and create a real estate investment trust. So I can take the properties I own, put them into a trust, and then sell units of that trust, almost like shares, to different investors. And by selling units in those buildings, I'm going to collect the capital that I need. So when I collect the capital that I need, then I can go ahead and then buy more buildings that generate more income. So an example of a company like this is Acorn. Acorn is a real estate company in Kenya that does student housing. Actually, soon they'll be in Uganda doing student housing as well. They have a brand called Kwetu, for those of you who've been in Nairobi, and they've done a lot of student housing blocks around the city. And they were meeting a need where students didn't have enough accommodation on campus and were having to take, share small, not very nice apartments or spaces near their schools, and paying quite high in rentals. And so they decided, why don't we create these amazing spaces for students that are comfortable, that are modern, that these kids can actually pay rent in, and for something that is sufficient. Anyway, so they started off and have done a great job, and so have created an opportunity for people to participate in investing through the real estate investment trusts. So when the trusts are listed on an exchange, you can buy the units like shares and participate in the dividends that are offered by this company. And the dividends that they pay are based on the rental income that they receive. So it's like investing in real estate without owning the real estate, without being involved in the management of the real estate, without being called to fix the roof and sort out the leaking taps and things like that. So when you invest in the real estate investment trust, you get a dividend at the end of the year or as often as they pay, without the hassle of being involved. Now, the only thing is that because it's part of a larger product, then you end up getting a return that may be lower than you owning your own unit. But because the investment amount is not much, then the benefit of that is that with little money, you can actually own real estate or get real estate exposure in your investment. So that's what real estate investment trusts are, and you can actually access them if you are so interested.
Just to take you back, Rina, just a little
Mm-hmm.
bit, which of them is listed?
It's called ILAM. Is it not ILAM anymore? What is it called now? It's ILAM. It was bought by ICEA. ILAM. It's called ILAM.
Okay.
Yes.
It was a follow-up question. So you see there's quite a bit of interest here.
Yeah, no, it's good. It's good. And by the way, we are here to help you. And if you want access to those, it's very easy to buy. It's like buying a share on the stock exchange. So you would just need to provide us with your KYC details, your ID. We'll ask you for the list of things that we need, which are not very many. You can open an account and invest in a real estate investment trust or any other stock. So there's a question for Jacqueline. Sharon, you see that?
There's anonymous Joyce. Okay. I think Joyce has a question. It's directed to NSSF. Unfortunately, we don't have anybody from the NSSF to answer this question, but Jackie is going to take up this question. Joyce, I'm not sure if you do have our details and contacts as Legacy Hills. We can get you this answer to the question you've asked. We are not in position to really give comments on the NSSF products, but Nagasha, Jackie will take note of your question and we'll ensure you get an answer for it. Joyce is saying something. What is your take on Rina investing in VCs? I think these are venture capital funds.
Yeah.
And does FAIDA deal in this kind of transactions?
Yeah. So thank you for your question, Joyce. What's my take? Well, venture capital is very interesting, but then it's also very risky. So I have invested as an individual and I wouldn't say I've invested in a business that was a young business. So what is venture capital? For some people wondering what is VC? Venture capital is where you invest in a business that is at its nascent stage, so very young. It's a startup. And so what happens, venture capitalists come and invest in these young startups with a view of being able to help them, support them, be on their boards, provide guidance or advisory, and then hope it will grow, and then they sell their stake to another investor and they make a return. VCs are run as funds. So you can have a fund, a VC fund specifically, and that's how it works. So a VC would have money from that, pulled from different investors, usually high net worth investors and institutions, family offices that are looking for this, young companies, and they invest in those companies with a view of exiting after 5 to 7 years. Now, my take is that they are very high risk. And for somebody who's investing and you're kind of just getting started or growing in your investment, this would be, as I said, on the third level where you're looking to create wealth, but it's high risk, so you could actually lose all your money. I've invested as an angel, not as a VC, where I have invested in a company that is young, it is in startup stage, and one has gone under, completely lost all their money that I invested. And one did well, and I got my money back and a little bit more. So it's very risky, but it provides really interesting opportunities. And I think it's something that needs to be encouraged in this part of the world so that more of us are able to provide young businesses and startups with the capital that they need to grow. I think what has made US businesses thrive so much is because there's an active and very well-funded VC environment in the US. If you go to Silicon Valley, you have a whole host of investors and, you have all kinds of businesses. You come up with an idea in a short while, you've been able to raise the capital. And I think we need to get to that place as a continent where we have locals funding locals who have started tech companies and have ideas. And so you don't have, young, very brilliant people jetting off to Silicon Valley because that's the only place they can raise money. I actually encouraged Jacqueline to talk to NSSF and see, can you start a VC fund? Safaricom actually did that in Kenya. Safaricom started a VC fund called the Safaricom Spark Fund. And so they've taken some money from their returns and said, you know what, we're going to fund Kenyan startups that within the tech space, and potentially even, take them over 100% or, just invest in them and see what kind of return can we make. So I think they are a great way to also expand an economy through investing in small businesses.
So Rina, sorry, we had to cut you short. So the person who asked about the venture capital funds, I think it's about time now that we start developing our ecosystem in Africa, not just East Africa. And to just give you a sneak peek, the fact that you're on this call, Legacy Hills is actually in very advanced conversations with VC funds in Italy, Silicon Valley itself. We might be hosting some in the near future.
Wow.
So we actually, right now, we're doing a lot of engagements, research around venture funds, and we might bring one of those to Uganda, and then it will spread out to the rest of Africa. So whoever is on this call, just keep your tabs, follow us on social media, because once the news is out, you'll be able to get to know this. I know for sure we've done so well with fund management, financial assets. Alternative investments is a place we are still struggling as Ugandans, where everybody's investing in financial assets, but like you say, that these startups that have brilliant ideas that need money to be invested in their businesses to thrive and grow, and nobody's looking there. Maybe they are, but it's not enough. So yeah, Legacy Hills is actually looking into venture funds, and very soon you'll hear some announcements. You're going to hear a bit of events that are going to come up next year, 2025. And if you're on this call, just keep tabs with us. When the news is out, you'll be the first ones to know, because we already have your details, because you registered for the webinar. If we have these engagements, you'll be the first people to be invited. And Rina, I'm inviting you. I don't want to disclose it here. I'll invite you for the next year's event.
Fantastic. And I will come.
I don't know if there are any other questions, Rina.
There are. So there's one more here. So he says, I'm Ugandan and I've been investing in government securities for several years through a nominee arrangement. So yes, actually, thank you for that. That's a nominee arrangement is definitely possible even with FIDA. So the answer is yes, FIDA Investment Bank does have such arrangements. I think what typically happens is that most investors want to be able to have a direct account with the central bank, and so that's where then the carry element comes in. But yeah, we're happy to get into that arrangement with somebody who's interested in investing. What that just means is that you'll open an account with FIDA, and then FIDA invests on your behalf in the government bond. Okay, so this question is, what are the best assets to invest in and how much so that I can have a sustainable monthly income? Okay, so here you're looking to invest to generate a sustainable monthly income. So the income generating investments that give you monthly income are rental. Rentals give you monthly income. You can also use bonds, by the way, to generate a monthly income for you. I'm guessing bonds in Uganda are similar as Kenya in terms of paying interest semi-annually. And so what you could potentially do is decide, okay, I have this amount of money. I'm going to continue buying bonds so that I receive interest. So if I invest, let's say in December, or invest in January, my bond will give me an interest payment in June and another one in December, or is it July and then January? And then I invest in February, then I'll get interest in August and then February. Then I invest again in the next month and so on and so forth. And you keep, so you'll find once you do that over a period of 6 months, and even if the 6 months are spread in different times, even if you do this over the next 3 years, you're like, okay, I'm going to save money so that I buy a bond that can give me an income twice a year. Then you can keep buying so that then you make sure in 3 years you have a monthly income coming from the bonds that you've invested. So in terms of sustainable income, bonds are great. Real estate is also good. You can also get dividend paying stocks that are well run. So companies that are well run, that are doing well, growing, and consistently offer dividends. But the shares option, where you're getting a dividend, are a little bit more risky. It's difficult for you to be sure that they'll pay a dividend, because the dividend is where they share profits. And so if they don't do well, if profits don't come through, then it's not possible to then get the dividend, or the amount of dividend may vary.
Okay, I think all the questions are answered. Is there anything left? I don't think so.
There's one in the chat.
Okay, sure.
What global markets does, I'm guessing they mean Oak Special Fund invested? What assets do they, okay, so okay, so the assets that they invest in are stocks, US stocks, local stocks, treasury bills, treasury bonds, bank deposits, commercial paper, and also a very small amount goes into derivatives. So we also have derivatives, and also FX, so foreign exchange trades or currency trading, but the currency trading element is small. So that's generally what the fund invests in.
Okay. Somebody needs details for legacy. I don't know. Elijah, are you able to type here, or it's me who's supposed to type? Can you type in the chat? I have an assistant too, Rina. It's called Elijah.
Fantastic.
Advisory. Are you able to type? Okay, so I think I need to type these details. But Rina, your final remarks as I come up to close the webinar. Thank you so much, though. You have done amazingly well. Be sure
Okay.
that all the people that logged on onto this call today on the webinar, even those that will listen after, because this is going to be recorded, you'll get a lot of inquiries, and we'll give you the support you need.
Thank you, Sharon.
Yeah.
Thank you, Sharon. I think finally, just in terms of closing remarks, I first of all must say thank you to Legacy Hills for this amazing work that you're doing in providing the literacy, the guidance, and the help to help your, fellow Ugandans to find great investment opportunities to continue to grow their wealth. I think what I would say is plug in, keep learning, because the more that you learn, the more that you're able to grow. Because the more that you learn, the more that you'll be able to know what opportunities are available for me. But beyond the learning, give it a try. It doesn't take a lot of money to start. So give it a try and start investing. And as you invest, then you get the practical experience of how to do that. Somebody's asking for contacts on FIDA. Rewa shared that shortly. She said, we would love to hear from you. You can reach us on. Those are the FIDA contact details. Please go ahead and send any questions there, and we'll be in a position to get back to you. Otherwise, thank you so much, and I hope to interact with each of you at some point in the future. Thank you so much, Sharon and Jacqueline.
Thank you, Rina, and thanks to everybody that tuned in this evening. We are blessed and honored to have you on this call, you registering, you being here and staying for the entire 1 hour. It's not that easy, We made this call at 7:30 in the evening because we wanted you to get home, beat the heavy traffic, and then we get this conversation. Once again, I want to appreciate NSSF Uganda for making this possible, giving us the platform to have these conversations, learning. Every time we knock on their doors, the doors are always open. So Nagasha, please take our heartfelt thank you to the entire team at NSSF. Thank you for being a part of this webinar, and to you, Rina, and the team at Moneywise and FIDA Investments. Thank you so much for making this possible. And I'm hoping to come to your offices very soon. And I want to be one of the first people that signs up and gets the account up and running, so that when I come back home, I'm able to guide each of the people that are participating on this webinar today. Thank you so much. Have a beautiful evening. See you on the next webinar, and bye for now.